We've talked about the corporate regulator ASIC and its action now lifted against Australia's largest private credit group, Trobe Financial. But ASIC's been astonishingly busy of late. Only last week it took action against the ANZ Bank, which it ordered to pay a $240 million penalty for widespread misconduct. Today, ASIC took action against Macquarie Group, again for promoting the failed Shield Master Fund on its investment platform. Macquarie's agreed to fully compensate investors in that fund $320 million they lost in the corporate collapse. But ASIC says it will still go ahead with federal court action against Macquarie's investment division after it admitted it did not efficiently, honestly or fairly deal with those investors. Well, ASIC's deputy chair is Sarah Court, who joins me now from Adelaide. Sarah, always good to chat to you. I mean, this puts some of the biggest names on notice in Australia, and it basically goes to their behaviour in dealing with customers, doesn't it?
Oh, look, it really does, Ross, and certainly in relation to the action we've taken against Macquarie today, the issue that we were most concerned about is to get money back to these investors. Now, these are investors who have not been able to access their funds for a good 18 months. They've been in limbo. There's a lot of uncertainty, and the fact that Macquarie has agreed to put those investors back where they were before they put their monies into this failed fund, you know, we welcome that. It's a really important outcome, and we have always had at the heart of our investigation in relation to this conduct by Macquarie and other trustees that are involved in these funds as well, to put investors back to where they were before. That's what we've done here with those Macquarie Shield investors.
OK, so a lot of those investors who were in Macquarie, when investing in the Shield Master Fund, you've observed may not have even considered that they were going into a separate entity. They were in the Macquarie platform. They thought that's where they belonged. So they were surprised when Shield collapsed and effectively took their money with them.
Yeah, one of the things we were really concerned about here was that many of these investors that our investigators have been speaking to had no awareness about the Shield Master Fund at all. All of the communications had come to them from Macquarie. Macquarie was their trustee. They thought their money was safe in a Macquarie platform account. And lo and behold, these monies were invested in the Shield Master Fund, which ultimately has collapsed. Now, for those investors, they've been, taken by surprise, many of them. They were advised to move their superannuation monies from one regulated fund into the Macquarie RAT platform. They thought their money was safe. It wasn't. And that's why we have really focused on getting money back here for those investors.
OK, but you say that this is also a more broad warning to those people who offer platforms to superannuation investors. It's a very common way, if people aren't in industry super funds, for people to invest their superannuation savings.
Yeah, I think it's important to make clear, Macquarie is just one of a number of trustees that have been caught up in this whole debacle, this collapse of both the Shield Master Fund and there's another fund, the First Guardian Master Fund. And what we're really trying to say to trustees here by this court action that we're taking is that if you're a trustee and you choose to have one of these choice platforms available to your members, then in our view, and this is still to go before the court, but in ASIC's view, you have a responsibility, you owe your members due diligence, and you need to make sure that the funds that you put on your platform are appropriate for your members. You need to monitor those funds, you need to be aware of the red flags, and we are hoping that this action will really send a message to those other trustees who want to host these choice platforms to make sure they are really doing their due diligence in relation to the funds they have available to their members.
Well, OK, just going back a decade, there was a Royal Commission into the behaviour of insurance companies, superannuation funds, financial planners and banks in regards to their behaviour and whether they were putting profit ahead of the individual customers. You've got examples in the ANZ, you've got examples in Macquarie here where you're saying these organisations acted unconscionably towards their customers. So what I'm saying is whether behaviour inside these large financial institutions has actually changed over the period of that decade.
Yeah, I think we have to be careful, Ross, with the terms being used. So the ANZ matter that, as you say, we took action against last week, Huge matter. ANZ has admitted to engaging in unconscionable conduct, and the penalties we're seeking the federal court impose in that matter are very considerable, $240 million for a range of misconduct. I don't want to suggest that Macquarie has engaged in unconscionable conduct. That's not what this case is about. Here we've said that Macquarie, as a superannuation trustee and a licensee, has failed to comply with its licence duties to act efficiently, honestly and fairly in relation to its members. So that's the case here. And importantly here, as I've said already, the real issue we are concerned about here is to get money back to those investors. $320 odd million Macquarie has agreed to pay. Those members are getting investment monies back to them as we speak. We're hearing about that already. That is very welcome news to us. Macquarie has moved on this quickly once this court action has been agreed. They've admitted those contraventions. So what we're focused on is getting that money back to those people.
And of course, that means the whole industry is on notice as well. Can I take you to one other quick one while we're here? We spoke earlier to the chief executive of Trobe Financial after, of course, it was frozen for 21 days, which has now been lifted from taking in new funds. Now, again, there you were concerned about investors, consumers, whether they really understood the risk inside those organisations.
That's right. We issued stop orders in relation to a couple of those funds from La Trobe. We were concerned that investors, again, were not aware, what it was they were getting, that it's a technical term, but the target market determination issued by La Trobe was inappropriate. Because of our concerns, we issued the stop order. La Trobe have worked to remedy the concerns that we had, and the stop order, at least in relation to a couple of those funds, the Australian funds, has now been lifted. But, investor protection, consumer protection, whether it be Macquarie, La Trobe, ANZ and others, it is at the heart of what we are concerned about.
Sarah Court, always good to chat to you, and many thanks for your time on the program today.
Thanks for having me on again, Ross. Thank you.